Imagine uncovering the secret rhythm behind Bitcoin's wild price swings, a predictable cycle that has turned ordinary investors into millionaires time and again. As a beginner, you might see Bitcoin as chaotic, but what if I told you it's following a 4-year pattern tied to its very code? Today, in February 2026, with Bitcoin trading around $67,000 after a turbulent year, we're breaking down the Bitcoin market cycle step by step, making it simple for newcomers like you. Stick around because by the end, you'll know how to spot opportunities in this cycle and potentially position yourself for the next big wave. And for 100% true news and correct advice backed by reliable sources, like the video, subscribe to Joseph Markets and comment Joseph Markets below. It helps us bring you more accurate, beginner-friendly finance content. We'll cover everything from the basics of halvings to real historical examples and strategies you can use today. But first, let's build your foundation. This video key points. Research suggests that Bitcoin operates in roughly 4-year market cycles, primarily influenced by its halving events, which reduce mining rewards and create scarcity, often leading to price appreciation in the subsequent bull phase. It seems likely that these cycles consist of 4 main phases: accumulation, markup, distribution, and markdown, driven by investor sentiment, supply dynamics, and external factors like regulation and macroeconomic conditions. The evidence leans toward Bitcoin's historical patterns, showing significant recoveries after bear markets, with post-halving bull runs delivering substantial gains, though each cycle varies in intensity and duration due to increasing market maturity. While cycles provide a framework for understanding volatility, they are not guaranteed predictors. Beginners should approach with caution, focusing on long-term holding rather than timing the market perfectly. Understanding Bitcoin market cycles. Bitcoin market cycles refer to the recurring patterns of price fluctuations observed in the cryptocurrency's history. These cycles are typically tied to Bitcoin's halving events, which occur every 4 years and have the reward for mining new blocks, reducing the rate of new Bitcoin entering circulation. This built-in scarcity mechanism, designed by Bitcoin's creator Satoshi Nakamoto, aims to mimic precious metals like gold and control inflation. For beginners, think of these cycles like seasons in the financial world: periods of growth, spring and summer, followed by decline, fall and winter, repeating over time. Historically, each cycle has lasted about 4 years from one halving to the next, with distinct phases that reflect changing investor psychology, from fear and doubt to greed and euphoria. The 4 phases. Explained accumulation phase. This is the winter stage after a market downturn where prices stabilize at low levels. Smart investors, often called whales, quietly buy up Bitcoin, anticipating future growth. Sentiment is pessimistic, trading volume is low, and prices range-bound. Markup phase, bull run. The spring and summer of the cycle, where prices break out and rise steadily, often accelerating into a frenzy. Positive news, increasing adoption, and FOMO, fear of missing out, drive demand, leading to new all-time highs. Distribution phase, the fall transition, where prices peak and plateau. Early buyers start selling for profits, while late entrants hold optimistically. Volatility increases as bulls and bears battle, signaling the end of the uptrend. Markdown phase, bear market. The harsh winter, characterized by sharp declines as fear dominates. Weak hands sell off, prices drop significantly, often 70 to 90% from peaks, and the market resets for the next cycle. Historical examples. 2012, halving cycle. Bitcoin's price surged from around $12 to over $1,000 in 2013, a massive bull run followed by an 85% correction in 2014-2015. 2016, halving cycle. From $650, Bitcoin climbed to nearly $20,000 in 2017, then crashed to $3,200 in 2018. 2020, halving cycle. Starting at $8,800, it peaked at $69,000 in 2021 before dropping to $16,000 in 2022, recovering to $126,000 in 2025. 2024, halving and beyond. Post-2024 halving, Bitcoin has experienced volatility, trading around $67,000 in early 2026, potentially in a markdown or early accumulation phase. These examples illustrate Bitcoin's resilience, with each cycle ending higher than the previous peak, but also highlight the risks of severe drawdowns. Tips for beginners. Start small. Allocate only what you can afford to lose, perhaps 1 to 5% of your portfolio. Use dollar cost averaging, DCA, to buy gradually over time, reducing the impact of volatility. Educate yourself with reliable sources like CoinDesk or Investopedia, and store Bitcoin securely in a hardware wallet. Avoid leverage or day trading until experienced, as cycles can test patience. Remember, while history rhymes, external factors like regulation or economic shifts can alter outcomes. For more in-depth exploration, including strategies and predictions for 2026, see the detailed report below. What is a Bitcoin market cycle? An introduction for beginners. As a beginner, the first thing to grasp is that Bitcoin doesn't move randomly. It follows market cycles, just like stocks or commodities, but with its own unique twist. A Bitcoin market cycle is a recurring pattern of price ups and downs, typically lasting about 4 years, driven by supply changes, investor psychology, and external events. At its core, Bitcoin's cycle is influenced by its halving mechanism, where the reward for mining new Bitcoin is cut in half every 210,000 blocks, or roughly every 4 years. This creates scarcity, much like limiting the supply of gold, which can drive prices up when demand stays strong or grows. According to Investopedia's explanation of crypto market cycles, these patterns are natural in any market and help explain why Bitcoin has seen massive booms followed by sharp corrections. According to Investopedia, the cryptocurrency market cycle has 4 distinct phases. For beginners, think of it like the seasons. Spring brings growth, summer peaks with heat, fall sees cooling, and winter resets everything. Bitcoin's cycles have historically led to new all-time highs after each reset, but they've also tested patience with deep drops. Why does this matter now in 2026? We're post the 2024 halving, and Bitcoin has dropped 45% from its 2025 peak of $126,000, trading around $67,000. This could be part of the cycle's winter phase, but history shows recoveries can be spectacular. Beginners should note that while cycles provide a roadmap, they're not guarantees. Factors like regulation or global economics can alter the path. According to Ledger's Academy on Crypto Market Cycles, understanding these phases helps you identify opportunities and make informed decisions. According to Ledger, there are 4 phases of a market life cycle: the accumulation phase, the markup phase, the distribution phase, and the markdown phase. To make this relatable, imagine buying a house in a neighborhood that's undervalued, accumulation, watching values skyrocket as people move in, markup, then seeing prices stabilize as sellers cash out, distribution, and finally a market dip when fear sets in, markdown. Bitcoin works similarly, but faster and more volatile. As a beginner, start by recognizing that these cycles have repeated since Bitcoin's launch in 2009, giving you a framework to avoid panic selling or FOMO buying. Stay with me as we dive into the halving, the heartbeat of these cycles. As a beginner, have you ever wondered why Bitcoin seems to boom every few years? Comment your thoughts below, and for more simplified explanations, like, subscribe and drop Joseph Markets to support real source-backed content. The role of Bitcoin halving in market cycles. For beginners, the Bitcoin halving is like a built-in economic event that kickstarts each cycle. Every 4 years, the number of new Bitcoins created and rewarded to miners is halved, reducing the supply entering the market. This is hard-coded into Bitcoin's protocol to cap the total supply at 21 million coins, preventing inflation like with fiat currencies. The halving slows the flow of new Bitcoin, and if demand holds or increases, prices can rise due to scarcity. According to VanEck's blog on Bitcoin halving history, halvings have historically been followed by price surges, though the impact varies. According to VanEck, past halvings have taken place during the early stages of Bitcoin bull markets. Let's look at history. The first halving in 2012 reduced rewards from 50 to 25 BTC, and Bitcoin's price jumped from $12 to over $1,000 in 2013, a 8,000% gain. The 2016 halving, 25 to 12.5 BTC, saw prices climb from $650 to nearly $20,000 in 2017. The 2020 halving, 12.5 to 625 BTC, proceeded to run from $8,800 to $69,000 in 2021. The 2024 halving, 625 to 3,125 BTC, has been followed by volatility, with a peak at $126,000 in 2025 and now a correction to $67,000. Why the impact? Halvings create hype and speculation. Miners get less reward, so some may sell less or shut down inefficient operations, tightening supply. For beginners, this means halvings often mark the start of bull phases. But the lead-up can be choppy. According to Fidelity Digital Assets research on Bitcoin halving cycles, 1 year post-2024 halving, Bitcoin's performance is muted compared to past cycles, but fundamentals are stronger. According to Fidelity Digital Assets, 1 year post-halving, Bitcoin's price performance may seem muted compared to past cycles. In simple terms, imagine a bakery that halves its daily bread output. If customers keep coming, prices go up. Bitcoin's halving does that for digital bread. As a beginner, track upcoming halvings, next in 2028, using sites like CoinMarketCap. This event is why cycles are roughly 4 years long, giving you a timeline to plan investments. But remember, past performance isn't future-proof. External factors like U.S. interest rates or regulations can influence. Next, we'll break down the 4 phases in detail. Phase 1. Accumulation. The quiet buildup. As a beginner, the accumulation phase is where the cycle resets after a big drop. Prices are low, sentiment is pessimistic, and the market feels dead. Most people are scared off, but smart investors, whales, institutions, start buying quietly, accumulating Bitcoin at bargain prices. Trading volume is low, prices trade in a tight range, and there's little news hype. This phase can last months to a year, testing patience. According to Crypto.com's guide on the 4 phases, accumulation is when sellers have exited and prices stabilize, with low volatility. According to Crypto.com, a crypto market cycle consists of 4 phases: accumulation, markup, distribution, and markdown. Historical example. After the 2018 crash, Bitcoin accumulated around $3,000–$6,000 in 2019, with whales buying as fear dominated. Similarly, post-2022 dropped to $16,000, accumulation built through 2023 before the 2024 halving spark. In 2026, with prices at $67,000 after a 45% fall, we might be entering or in accumulation, as ETF outflows slow and whales add 53,000 BTC recently. According to Equity, whale wallets added roughly 53,000 Bitcoin in the past week. For beginners, this phase is like shopping during a sale, the best time to buy if you believe in Bitcoin's long-term value. Signs to watch: flat price charts, decreasing exchange reserves, people moving BTC to cold storage, and on-chain metrics showing more long-term holders. According to Ledger's Academy, use tools like Glassnode to spot accumulation through rising holder counts. According to Ledger, use tools like Glassnode or CoinMarketCap to track on-chain data. Tip: use DCA, dollar cost averaging here. Buy small amounts regularly to average your entry price. Avoid FOMO. This phase builds the foundation for the next bull run. But be cautious. If macro conditions worsen, it could prolong. Stay tuned for the exciting markup phase. If accumulation is the calm, the next phase is the storm of gains. For beginner-friendly breakdowns like this, like and subscribe to Joseph Markets and comment Joseph Markets to join the community. Phase 2. Markup. The bull run begins. Now, beginners, the markup phase is where the fun starts. Prices break out of the accumulation range and start climbing steadily, often accelerating into a full bull run. Sentiment shifts from doubt to optimism, trading volume surges, and positive news flows in. Demand outstrips supply, pushing prices higher, and FOMO kicks in as more people join. This phase can last 12 to 18 months, with Bitcoin often hitting new all-time highs. According to Hyro Trader's blog on Bitcoin cycles, markup is when price breaks out, reclaims highs, enters price discovery, often post-halving. According to Hyro Trader, Bitcoin cycles typically move through 4 recognizable stages. Example: in the 2020 cycle, markup began after the halving, with Bitcoin rising from $10,000 to $69,000 in 2021, driven by institutional adoption like Tesla's buy. In 2017, from $1,000 to $20,000. In the current cycle, markup peaked at $126,000 in 2025, but now we're correcting. For beginners, watch for breakout signals. Prices crossing key moving averages, like 200-day MA, increasing Google search trends for Bitcoin, and rising exchange inflows-outflows. According to Caleb Ann Brown's market cycle chart, this phase features increasing demand and price momentum. According to Caleb Ann Brown, the Bitcoin market cycle refers to the recurring pattern of price behavior. Tip: enter early if you missed accumulation, but use stop losses to protect gains. Avoid chasing highs. Dips in markup are buying chances. As a beginner, this is when media hype peaks, so stick to facts, not emotions. The phase ends when greed takes over, leading to distribution. Phase 3. Distribution. The peak and plateau. Beginners, distribution is the tricky transition phase where the bull run slows. Prices reach peaks and start plateauing, with high volatility but no clear direction. Early buyers, from accumulation, begin selling for profits, while latecomers hold hoping for more gains. Sentiment mixes greed and uncertainty. Volume stays high, but prices range-bound. This signals the bull market's end, often lasting weeks to months. According to Ledger's guide, distribution marks the end of a bull run, with a best is behind us attitude. According to Ledger, the distribution phase marks the end of a bull run in the market. Example: in 2021, after $69,000 peak, Bitcoin distributed around $50,000, $60,000 before crashing. In 2017, similar around $15,000, $20,000. In 2025, distribution may have occurred at $100,000, $126,000, with sell-offs leading to the current drop. For beginners, signs include flattening charts, increasing sell volume, and the Fear and Greed Index showing extreme greed. According to Crypto.com, selling increases due to doubt. According to Crypto.com, buyers and sellers reach equilibrium after a bull run. Tip: take partial profits here. Don't wait for the top. Diversify gains into stable assets. As a beginner, this phase teaches not to get greedy. Use indicators like RSI for overbought signals. If you miss selling, hold through, but prepare for markdown. Phase 4. Markdown, the bear market correction. The markdown phase is the crash part, beginners. Prices drop sharply as fear dominates, supply overwhelms demand, and weak hands sell in panic. Volume may spike during sell-offs, news turns negative, and prices can fall 70–90% from peaks. This resets the market, lasting 6 to 18 months, leading back to accumulation. According to Investopedia, markdown is when investors who bought at the top experience losses, panicking and selling. According to Investopedia, the markdown phase marks the end of the bull run, bear market. Example: post-2021 peak. Bitcoin fell 77% to $16,000 in 2022. Post-2017, 84% dropped to $3,200 in 2018. In 2026, the 45% drop from $126,000 might be early markdown, with potential for more if $65,000 breaks. According to Seeking Alpha, a confirmed bearish symmetrical triangle breakout suggests a move towards $60,000. For beginners, this is tough but educational. Signs: downtrending charts, negative funding rates, liquidations. According to VanEck, liquidations totaled $3.4 billion recently, but that's not climactic. According to VanEck, liquidations totaled $3.4 billion. Tip: avoid selling at bottoms. Use as buy chance if fundamentals strong. HODL core positions, DCA in. As a beginner, focus on education during bears. Markets always recover. History shows bears lead to bigger bulls. See the examples next. For more historical insights, subscribe to Joseph Markets, comment Joseph Markets. Historical Bitcoin cycles, lessons from the past. Beginners, let's look at past cycles to see patterns. First cycle, 2011-2013. Accumulation at 110, markup to 163, Distribution marked down to $200, 83% drop. Recovery led to second cycle. Second, 2014-2017. Accumulation $200-400, mark up to 19,66666. 84% mark down to 3,022. According to CoinTracker, Bitcoin's price increased +90% from 2020-2021. Third, 2018-2021, accumulation 3,000, 10,000, mark up to 69,000, 77% mark down to 15,476. Fourth, 2022-2025, accumulation 16,000, 30,000, mark up to 126,000, now potential mark down to $67,000. Lessons, each peak higher than last, drawdowns deep but recoveries stronger. Halvings catalyze. According to ARK Invest, Bitcoin's performance is roughly in sync with the historical 4-year cycles. According to ARK Invest, Bitcoin cycles entering 2025. For 2026, post-2024 halving, we might see extended bear or early bull. Beginners, study charts on TradingView. Indicators to track Bitcoin cycles for beginners. Beginners, use tools like Fear and Greed Index, Extreme Fear, Q, Buy, Greed, Sheer Sell, RSI for Overbought, Oversold, Moving Averages, 200-week MA as support. On-chain, exchange reserves low, sharp, bullish. According to Caliban Brown, low reserves on exchanges before new highs indicate holders keeping Bitcoin off the market. According to Caliban Brown, Bitcoin exchange reserves. Hash rate for network health. Google Trends for sentiment. Tip, free tools like CoinGlass for funding rates. Strategies for navigating cycles as a beginner. DCA, buy fixed amounts regularly. HODL, hold long-term. Take profits in markup. Diversify. 1-5% portfolio. Avoid leverage. According to The Motley Fool, long-term investors see opportunity due to strong fundamentals. According to The Motley Fool, Bitcoin's latest plunge has traders panicking, but long-term investors see opportunity. For 2026, if bear, accumulate. If bull, ride carefully. Future of Bitcoin cycles. What 2026 holds in 2026, post-2025 peak, likely bear or accumulation. Predictions, 100K if cuts, 50K if stagflation. According to Bitcoin Magazine, by 2028 this cycle may lose its influence. According to Bitcoin Magazine, in less than 3 years, the Bitcoin price will change forever. Beginners, stay informed, invest wisely. There you have it. Bitcoin's market cycle demystified for beginners. For more, like, subscribe Joseph Markets, comment Joseph Markets.